So what's the simplest way? Diversification again, So diversification is really the key in trading, I would say in general, but especially in crypto, and especially if you want to trade something else than just Bitcoin or maybe Ethereum, but also coins which can really make 600% during the day. And it's possible and it's happening.
Sitting down today with Pavel Kycek. We spoke, I believe, a year ago when we were in Prague in person. We did interviews. It's going to be a link in the corner. You can check it out over here. But Pavel, good to sit down with you again. Good to talk trading once again. And it's going to be fun to kind of see where you're at in trading so far.
Yeah, thank you. Hello, Etienne. Thank you for inviting me and looking forward to our conversation.
Definitely. I mean, tell me what's been going on since we spoke roughly a year ago. What's new and what are you working on now?
Yeah, well, when we are talking together last time, we were a company of 3 people working on managed accounts for institutional and high net worth individual clients and also retail traders. We grew quite a lot. Robuxio company has 11 full-time employees right now. We are having other part-timers and we are still growing. We are well settled in institutional managed account trading. So yeah, doing quite well. Lot of is going on, but everything seems to be fine.
That's awesome. Tell me a bit more about kind of how did the team expand and what are the new responsibilities you're trying to fulfill?
Yeah, so we onboarded new quant. We have a team of 6 software developers and software architects. They are taking care of the whole trading engine, about the trading backend, because not many people realize how difficult it is to properly run manage accounts in a way we are running in crypto. So it's really very demanding on the software infrastructure. And that's why we have the whole team of software architects and developers. We have project manager. We have another quant, as I told you. And yeah, we are 3 co-owners and yeah, growing.
So you're at a point where you run these strategies now fully automated. You are running algos for managed accounts, like you said, in the crypto market. Has the strategies changed in the past year, or are the strategies at the core of what you trade the same?
As you said, basically all the models we were running when we were talking together are the same as we are running right now. We have added a few new ones, but in general, because we are trying to keep the stability of the solution as much as possible, we are not pushing many changes in general. If it is not needed, we try to follow the out of sample life of our portfolios and models. That's why we are not making any crazy changes. It's more about how to deal with liquidity, because we are well settled in 8-figure territory with our managed accounts. It's about how to spread the liquidity across different coins. It's really more about like detailed work than trying to find something completely new.
With the market we've had, and we had probably some big bull market in the past year in crypto, some more slow market, kind of more sideways. Was it a good thing for you, or do you have any times where you kind of perform a little bit less well than usual?
In general, it was a good market for us. Why? Because there was pretty big dump at the start of 2025. And because we are also trading through short side, we have made some nice money on this one. And we also grew by AUM thanks to this market, because as we are talking about, the edge to the short side is much weaker compared to the long side on crypto, similar to stocks, for example. Not many professional trading teams are trading the short side too. And that's why it was our advantage that we were able to lock in some profits during this period. And that's why we grew quite a lot in this period too.
Are investors more careful when the crypto is going in a down market? Do you feel like they still want to invest, or they're kind of more afraid to go in, even though you can still make money in down markets anyway?
Yeah, that's a very good question. In general, I would say that it depends on the type of investor. Institutions, they don't care that much because they know what the parameters of our portfolios are. And as long as we are staying in some threshold or under some threshold, based on volatility, max drawdown, expectancy, Sharpe ratio, and these kind of simple metrics, we are basically okay, and they don't care that much. On the other hand, you can see here the difference between individual traders or investors and institutional investors, because really individual traders, they tend to panic much more. Yeah, but it's about explanation. The more we are explaining what it is about, the more they understand, and the less they are making like some quick steps which are not that great for them. So
Yeah, that totally makes sense. I mean, I think we covered this in the last episode we did together, but for someone who's new, I think the toughest thing is going to be to find that very first investor, the first person that gives you money to trade with, or the first one that you manage an account for. How did you find that first investor? How do you tell people to go about finding their first investor?
for us, it was about socials. We started on X, we started on LinkedIn. We were sharing a lot of information. We were talking about what we are building, what are the basic rules for our models, for our portfolios, how we are approaching trading in general. And that really helped us growing pretty fast.
And was there any questions about like the first person? Do they question more, or are they willing to give you capital to look into how you trade? Or
Yeah, of course. The longer we are on the market, the higher the stability of our clients. Let's put it this way. And it's also about our growth. As we are growing, we are not onboarding the smallest retail clients. And honestly, you can very well see the emotional difference between the smallest retail clients and even more advanced high net worth individuals, because the main difference is patience. The problem with small retail trader is that they tend not to be patient, and it is really the worst approach to trading. As if the patience is not there, you cannot go through drawdown and build your equity curve to all new all-time highs.
I think it takes a lot of effort also to just like not touch something when you know it's working decently well. You always want to make things better. You want to try to improve things. Especially with algos, you could go and like go crazy. You could go with like AI and try to like build some more fancy ways to do it. How do you make that balance between keeping things the same versus trying to keep improving also over time? Because you always want to, I guess, get better over time.
That's a good one. Well, in general, we know what we are trading and why. We want to be trading models which are traded on stocks, which can be traded on commodities. We are taking these models and we are trading them on crypto. And now, because we are running momentum and mean reversion approaches, we cannot find infinite number of different models. So we already know that finding 100, 200 different models probably doesn't make a lot of sense for us. That's why we are benchmarking all our live models. We are checking what they are doing, comparing them to historical results, comparing them to backtests, and basically based on these numbers, we can see that we are okay. And really, it's not about trying to optimize or re-optimize some model which is running live for a year or 2 years, because honestly, the longer the real out of sample period of a model, the the higher value the model has for a trader. So that's why we know that optimization is not the way we would want to go.
How much do you consider yourself to be a trader these days? I'm guessing in the beginning you do a lot more trading than you do now. Do you still go and trade manually, or do you let the algos run and do their own work all the time?
Crypto, I'm not trading manually at all. Of course, Robuxo is fully automated solution, which is completely running in the cloud in Amazon. Me personally, I'm still running some models on stocks, let's say semi-automated, which means that I'm running my scanners once a day and sending orders to opening or closing auctions. But with Robuxo, we are also going to stock trading and commodity trading. So at the end of this year, I would like to have everything fully automated under a Robuxo mark.
Some people might also ask you this: is like, why don't you automate the whole thing and all strategies? Do you like the aspect of trading manually, or do you plan to automate everything in the future?
Yeah, everything will be automated. For algo trading, I would say it's it depends on which level you are. I'm not saying that I'm super big expert, but I've been in trading over 18 years actually, and I've seen a lot of things in the market. And now I think that for an algo trader which is starting, it makes a lot of sense not to run everything full automatically. First, because it still pays off to watch the market on the daily basis, what it does, how it reacts to your orders, how it reacts to your open positions, how we are closing the positions, and so on. And second, the final step of algo trading, the automation, to make it really robust. It really, yeah, it's hard. It's not that simple.
Is it possible to make a algo strategy as good as you would trade manually, or even better? And how do you try to do that?
That's a good question. I would say for most traders, it's much better to trade algorithmically than discretionary. That's my point of view. Why? Because the emotions are a little bit smaller. You tend to understand the drawdowns a little bit better. And my belief is that trading, long-term trading or long-term profitable performance is about going through drawdowns, right? You simply have to survive your drawdowns. And if you are trading discretionary, you have some space not to understand enough what's going on with your trading. While if you are running some algos, you are trading fully algorithmically, you always can go to your tests. You can always go back to your historical data, and you can always reevaluate that the stage you are going through right now is based on the statistics, is based on the expectations. So that's why I would say that for most, algo trading is a little bit simpler. But on the other hand, I would say that the best discretionary traders will make higher returns compared to the best algorithmic traders. But we are talking about top out of tops.
At the same time, the mindset aspect is still there somehow. Did you ever feel, oh, I should just turn off the algo? I should just like turn it off. It's not working well. And then, do you ever feel like you want to turn off an algo completely?
Well, there is always psychological aspect in any trading, right? Because one thing is looking at your 5 years equity curve and go over the drawdown in a minute, and another thing is to go in through 6 months drawdown day by day. So it's big difference. It's not about that I would be pushed to switch off something or to make some changes, but of course you are definitely less, or yeah, it's always not emotionally nice to go over drawdowns, especially if you are managing other accounts, and especially if you are managing 8 figures AUM. It's different level. When I was trading for myself only a few years ago, I almost didn't mind going through drawdowns. Then I started trading uh, with Robuxio, and that's just another level. You get used to it, then the AUM grows, you are getting used to it again. So it's a process. It's a process. But the more you are in trading, the more you understand what are the metrics you should be looking at, what is the most important part of trading, and it's really consistency.
Tell me about the investor relations part of managing accounts for people. Do you have people calling you when they have a drawdown and they feel bad and they want to take their money out? Or I'm guessing it's different with the institutional investors, like big firms who invest in you. But how is that relationship with investors that you have to maintain over time?
Well, with institutions, it's really different. As you said, with individuals, honestly, our traders, our investors who are trading with Robuxio, these guys, they usually tend to be patient and tend to understand, because we are really trying to educate a lot, and then they understand what it is about. And really, I have to stress that most of our individual investors are on the high net worth individual side, and they already are invested in stocks. They are invested in some other investment vehicles. They understand that the key is long-term patience. So They know what's the maximum drawdown, what's the volatility of the solution. And then, yeah, we are getting emails from time to time, but it's not definitely that I would be on the call from the morning till the evening and explaining anything. That wouldn't be an environment I would want to work in, actually.
Probably not. But how do you handle these worried investors in general who are wondering, is he going to lose money forever? Is he going to come back on track? What do you tell them to think about? Or do you just let them take out their money?
Honestly, well, it's still their account, so they can do whatever they want, right? We are only using our software solution on their accounts. That's one. Second, we don't have that many investors you are describing. Most of the investors, they understand what it is about, and they really tend not to panic. And that's probably because we are really educating a lot. We are sending a lot of newsletters. We recorded a lot of videos in the past, and we are having intro calls with them. So they do understand what's the solution about. And if and I think now we are getting back, for example, to algo trading versus discretionary trading. If the understanding is good enough, then people tend to stick to the given solution. So, and that's why they understand what our algorithmic solution is about. They tend to stick to it much more. Honestly, we have had quite a few clients who were trading discretionary, big numbers, really big numbers, up to 7-figure accounts. And right now they are more like, yeah, it's pretty calm. Like the account is almost not moving during the day because they were used to crypto volatility of 15, 10, 20% per day to the upside, of course, but also to the downside. And with us, all the portfolios are made that way that they are still more conservative than aggressive.
That's a good point. And sometimes the worst part is if they don't know anything, like they don't know about what's happening in the market, and they see they can't go down, but they don't know why. If you explain them and you kind of educate them, like you said, I think it's a good thing to do for sure.
Yeah, for sure. I think in general, I would say that many traders, retail traders, they end up trading because they don't understand what they are doing, why they are trading, what they are trading, and they are not having the proper understanding of fundamentals.
Tell me more about fundamentals in terms of algo trading.
Yeah, so it's more about the fundamentals of the market in general. So you have to understand the market first, right? For example, crypto market. If you should describe the crypto market a bit, we are talking about momentum long market, which has mean reversion long characteristics. It's oversimplified. It means that crypto market has much bigger edge to the long side. It's similar compared to stocks, for example, and short down movements tend to be mean reverted to the long side. It's again similar to stocks. And you have to have this basic understanding, or it's always nice to have this basic understanding first. If you know what's going on, then you can start building proper models on this market. So for example, if I know that crypto is momentum market to the long side, I somehow also know that the best models to start with would be momentum long or trend following long or breakouts to the long side. And that's like the first step. Then the second step is that in algo trading, you can take advantage of diversification because it is much simpler to trade on many coins and quite a few approaches compared to discretionary trading. And again, now we know that we are trading, for example, momentum long or some breakout to the long side. We want to diversify. So we can, for example, split the capital into 10 pieces and run some well diversified momentum long approach. And that way we can add more and more models to the portfolio. The lower the correlation between these models, the better. And we can build something which is much more stable compared to single model trading, for example.
Does that mean that you would also put less risk on the short strategies for crypto, or you keep the risk the same?
Yeah, that's a good one. Well, to the short side, we would have to divide between momentum short or some breakout or trend following to the short side and mean reversion short. Momentum short is the weakest edge in crypto in a sense that especially the bigger coins, they tend to mean revert and basically trend to the long side much better because the shorts really, you are getting whipsawed pretty often and it can really hurt. So one is to diversify, which means to spread the allocation across 10, better 20 positions. That this way you are reducing the left tail risk of a single position on some small coin. And second is to diversify across approaches, also to the short side. And then we have mean reversion short, and it's slightly different approach. It has quite some edge in crypto, but the left tail risk, the risk that the coin will make 300% overnight, is still in the market to the short side, really. So what's the simplest way? Diversification again, So diversification is really the key in trading, I would say, in general, but especially in crypto, and especially if you want to trade something else than just Bitcoin or maybe Ethereum, but also coins which can really make 600% during the day. And it's possible and it's happening. And of course, if this 600% is going with you, it's perfect and worth is great. But you always have to think about the risks first. So you also have to be always well protected, and you have to think about how to protect against this type of risk.
Last time we talked a bit about this too, the fact that people expect you can just code a strategy into an algo and then your work is done and you're kind of good to be tired, like you're good to go and you don't have any work to do. Tell me about the kind of work you do these days now. Maybe it's different than, of course, not coding all the time, but what is the work involved into running the algo now that it's already put into place?
One thing is to build a model, right? Building the model, especially on crypto, I'm always recommending going with the models which are traded somewhere else. Because on crypto, we are still playing with a few years of data. Crypto futures are traded from 2020, better 2021. It was the year when we had some more pairs already, and you are getting some more data. So how many years we are playing with, right? A few. So that's why it's always nice to have a model which is traded somewhere else. Then, of course, you have to make some adjustments on crypto, but that's just the first part. Building the model is one part, and second part is how to trade algorithmically. And if you want to trade automatically, and on crypto, it's much harder to trade semi-automatically. For example, as I'm trading on stocks, because crypto is 24/7. So automation is almost a need. And if you want to properly automate the approach, it is really task. For example, personally, I wouldn't be able to do it. So you have to be well protected against API changes. You have to be well protected against some changes in the cloud, for example. So people all sometimes think about algo trading or fully automated algorithmic trading as about something which they just switch on and let it run forever, basically, some holy grail of trading. And it's not that far, but it's not also that simple. You have to put a lot of work. And for example, at Robuxio, just to give you some numbers, we are definitely putting the biggest resources to the software engineering team, because we know that the edges we are trading are pretty big and they can make a lot of money. But what's important is that the portfolio we have built in the past is the portfolio we will be really able to trade, which means that really you have to be very sure that the trading engine is doing exactly what it is supposed to do, even with any possible changes on the sub account part, for example. So that's why we are, for example, having one bot which is running on each sub account, client sub account, and it's checking that all the orders, all the running trades, everything what's going on is exactly as it should be based on the benchmark we are keeping for each client on our side in the cloud at Amazon. So yeah, of course, our solution is overkill for an individual retail trader. But in general, people tend to underestimate the automation, I would say, or they tend to underestimate more than the automation itself, the risks which are connected with the full automation. You always have to have many checkers in your trading bot or trading software, that if something is happening, you have to know. And that's a link many retail traders are missing. They, for example, are able to do some automation in Python, but they don't spend enough time with having all the checkers, all the alerts, or the whole alert system, which should be running above the automation, that you always know what's happening.
What so far has gone wrong for you in terms of algos? Was there any problems or issues that you've dealt in the past that you had to fix?
Yeah, that's a good one. I have to say that fortunately we haven't had any major issue with the algo itself. Why? Because we have pretty strict process how we are, for example, pushing any change. We anytime we are making some, not even major change, but any change in the software, we are always running it on a few of our accounts for a few days before running it on our accounts for a few days. We are running the solution or with, for example, 1 hour frequency to get as much feedback as possible. And just after this evaluation process, which takes some time, depends on how big the change is, we are starting trading it on the real accounts of our clients, not before. So because of this, and because of one of our co-owners, Denep is great software architect, we are always well protected. So, but really, that's also the main reason why we are able to do it this way is that there is a big group who is working on this one full time. But I would say for a retail trader, being retail trader, I would, for example, have some very small account, which I would be using as a test account. And I would push my updates on with any trading engine solution on this small account first to see that everything is exactly as it's supposed to be. And just then, after some evaluation process, you could start pushing it on your main account.
Tell people that watching this where they can connect with you or find out more about your work after they watch this interview.
Sure. So you can go to robuxio.com where they can find everything, to my Twitter account, x.com/Kycek, or what could be potentially interesting for your audience is that I've made also a course based on the course I've led on university. I've had 1 semester of algorithmic trading at university, and I recorded it in English, and it can be found on robuxio.com/course.
Awesome. Put the link below. People can check it out and reach out to you there. I appreciate your time here, Pavel. The advice you give to the listeners is pretty good stuff. And hopefully we can catch up with you in the future and talk trading once again.